and this comes from Shishir. There's actually two questions. Regarding the married put strategy that I just talked about, Shishir has a couple questions related to the married put approach. But I'm probably going to take your second question first, Shishir. What are the optimal technical analysis criteria for married put? Reason for asking is because some of the current married puts from our default screen on PowerOptions, our preferred screen for the married put approach, Dash, DraftKings, the MACD is turning downwards, giving a sell signal. Doesn't always mean a sell signal, but we're going to take a look at PowerOptions. But while we do that, Shishir and everyone else, of course, I want you to keep in mind Kurt Frankenberg's, the original author of the blueprint, of course, his initial mantra that's discussed right in the first 2 pages of the blueprint: don't time your trades, trade time. And we're going to talk about what that means in just a moment. So all that being said, let's navigate over to PowerOptions. Let's take a look at that default search screen that Shishir is talking about for the married puts. Let's see Dash, let's see DKNG, and let's look at a couple others as well. All right, so here we are now at the PowerOptions suite of tools. What we're looking at here is a basic trial account. This is our webinar account that we use for webinar approaches. And I'm going to go directly to the Married Put tab. Here's here you can see more information about the blueprint we're talking about, the full course on the initial structure of the preferred married put approach, going slightly in the money and far out in time to control risk to single digits, essentially trying to stack the market odds in our favor, and full discussion of the various income methods that are used, some that are related just to manipulation of the put, in addition to just selling premium against the underlying that's protected by that far out put. But I'm just going to go directly to the default search tool on PowerOptions. This is going to pull up our default search, the radioactive, sorted by earnings per share growth. This is the default criteria discussed in the blueprint for our preferred proper structure, going at least 150 days out in time for the protective put. Going slightly in the money, but not going too deep in the money to remove expectancy, to reduce expectancy so low where expectancy of potential profit is minimum. And we're going to control the risks to single-digit ranges. And we've got some other metrics. We're looking for stocks trading above their 50-day moving average, some basic volatility values, keeping the stocks between 9 and 200. These are all things that you can change based on your account size. And we have a preferred stock list that we typically like to use. We'll talk about that in a little bit as well. Here's some of our results directly from what Shishir had mentioned. Dash is the first one, currently trading at 121.76. We're showing that we could buy the August 125 put, that's 175 days out in time, for 14.38. This puts our controlled risk at about 8.3% with 175 days of protection. Now, if I open this married put, I'm going to say right now I'm opening it with 3 caveats in mind, discussed directly in the blueprint. Number one, I'm opening a position that I feel has the potential to move up, say, 3 to 6%, maybe in the next 20 to 40 days. And at the same time, has the potential to move up maybe another 5 or 6% in the following 2 to 3 months after that. In those cases, am I always right? No, but that's one of the reasons why we have the guaranteed protection in place, so that even in the worst case scenario, I can't lose more than 8%. Now, that's the worst case scenario. That's if I hold the position all the way to August, make no adjustments, accept no dividends if Dash pays a dividend, and hold it all the way to expiration, the stock's trading below 125. I'm likely not holding this all the way to expiration. I'm going to get out ahead of time. And the reason why is discussed in the blueprint. All right, so that's the structure of the married put. That's the first initial one. Now I have 13, 14 different income methods I can use against this position. But what's Shishir's concern? Okay, even though we're up a little bit today, 35 cents, take a look at charts when we go to big charts. That's usually what I use as default. You can also link to stock charts. And what Ernie and I typically prefer, I usually also have the RSI in here as a tertiary indicator. And of course, I'll put volume in as well. But I'm going to leave it as we had it real quick. And I'm typically just looking at a 3-month chart, by the way. If you talk to Ernie during a coaching session, you talk to me, that's usually how we recommend setting up the big charts for your particular screen. Now, it's a little bit difficult to see on this one. We're going to see a better example. This is Dash, remember, DoorDash. And Shishir is concerned about this MACD line, where our MACD has dropped below the EMA 9, sort of come back up a little bit. And he's concerned that this is showing a sell signal. Well, look at this chart over the last 3 months. When was the exact best time, Shishir, to get into this trade? It was here, wasn't it? When the MACD was declining before we saw a MACD crossover and the stock broke above its 20-day moving average. This typically would have been my entry point, hopefully, for this position. But I would have no problem entering this position here, where, yes, the MACD is positive. No problem entering this position here when the MACD went negative again, just like we had a slight little negative MACD here. And when the MACD was going negative, I would have no problem entering this position here, because the trend is still going in the same direction as the market goes. But again, I'm not saying that's necessarily the answer. I want to look at a couple more examples first, and then I'm going to talk to you about some of those other concepts. You would also mention DraftKings, DKNG. Let's take a look here at big charts one more time. When does it look like the best time was to enter this trade? If we had the opportunity of hindsight and to go back in time in our DeLorean. Well, recently in the past 3 months, the best time to buy would have been in this area when DraftKings was around $32, $33 per share. When what? When the MACD was negative before a potential crossover. Of course, I can say, oh, the MACD was negative here. Does that mean I should have been buying here and that was a good time to buy? No. That does not look like a good time to buy. That is not what I'm saying. Again, if I had been watching this position more closely, if I'd been following it, I wasn't following it because Ernie actually entered this into his Married Put portfolio right about here after the first Bollinger Band breakout, if I'm not mistaken, back on the 19th of January or sometime in mid-January. When that crossover happens, when you go above the 20-day moving average after a decline, that's usually what I might tend to look for. Am I concerned about this here? A little bit. Is there any other example I can see where it was right after the crossover was a bad time to buy? Yeah, I just sort of illustrated your concern on this particular stock, didn't I? The MACD just went negative. Stock fell below the SMA 20. Was that a good time to buy? I don't think so. We can see that. It would have dropped down from that range again of 38 down to about 32 or 33, right? So what would I be looking for here if I was interested in DraftKings? Hey, it's not on my watch list right now. But if it was on my watch list and I saw this bottom out, as we saw here, and I saw this getting close to another crossover, saw a crossover, and the stock consistently closed above that SMA 20, that might be a good time. As we saw over here, not saying it's going to, not saying that means it's always going to be that way. Now, I want to take a look at a couple of others while we're here as well. This is one that has been on my watch list, and I felt I missed it. MMYT. Now, you've seen, I'm sorry, Shishir, you're not currently subscribed to the Fusion subscription, but I've opened 2 new Married Puts recently, and in each of the briefs I had mentioned the 4 or 5 stocks that I'm watching. I essentially cleaned out my Married Put portfolio in the Fusion account early January, end of December, with the exception of the Fortinet trade, which I decided to continue. I'll show you why in just a moment as well. And the 2 that I opened so far were Urban Outfitters. We'll take a look at that chart in a moment. And TREX, one that worked for me a few years ago. I really liked it. So I decided to enter it again. I think it's maybe a good time with spring coming up and things of that nature. So I went into TREX as well. And other ones I'm watching are MMYT and PSTG, Pure Storage, as well as some others that popped up today. Your question. MACD is turning downwards, giving a sell signal. When was the best time, of course, again, in the last 3 months to get into MMYT? It was here, wasn't it? When the MACD was going negative and the stock was below the SMA 20. Then we had that breakout. Probably would have tried to enter here. I looked at the stock here and should have got in. Then I looked at the stock here and should have got in. Looked at the stock here, should have got in. I haven't. Now MMYT is showing a downturn. I don't think it's actually on the list. We'll have to take a look. It might be on the second page this year. But I still would have no problem buying into this position. If now it falls below the SMA 20, I'm still on my watch list. If I see this bottom out and this crossover start to happen again, and it starts to move, it does move below the SMA 20 and it starts to come back up, that's going to be my signal for MMYT. But again, part of the reason here that I'm illustrating it this way, there were tons of opportunities to buy this stock when you're seeing a negative MACD, when you're seeing a positive MACD, when the MACD was getting close to crossing back over. This might still be a good buy point for this particular position. Yeah, I might be a little bit hesitant now. I might wait to see if there's that next crossover, Shishir, and I might not jump in right now. There's other opportunities. But just because the MACD is showing a sell signal does not mean it's a bad time to get in. These three examples we've walked through so far, the MACD is showing that and the stock being below the SMA 20, in those cases, those three examples, which do not the market make, I'm going to clarify that in a couple moments as well, would have been the best times. Now, the one that I opened, Urban Outfitters. Not sure if I'm totally rebought in on retail, but once again, last 3 months, what was the best time to get in? There were 2 times. MACD was negative here and the stock was at 32. MACD was negative and stock was below the SMA 20 here when the stock was at still about the same 34.50, 35. Maybe even here, MACD is negative just below it, flirted with 38 again. I got in here. And I'm with it being well above, there's almost a Bollinger Band breakout here. It pretty much was really close. This was the Bollinger Band breakout, I'd say, between these two. This one didn't live up to it, had a pullback, but now it's still going up. Now it has earnings in 5 or 6 days. That's why I'm trading it as a married put. I don't feel like I entered this at the wrong point because the MACD is positive. I feel no regret that I maybe missed the best chances to buy this position maybe here and here. Because why? Because looking at the other analysis, the expectations maybe I have don't have to be yours. Hey, but I'm going on record saying that these were my expectations. We'll find out in a little bit if I'm right or wrong. I feel that this stock has the potential to move up 3 to 6% from my purchase point in the next 20 to 40 days, taking a chance with the earnings in place. But hey, that's why I've got the protective put in place as well. And that's going to get me to a point where, I'm sorry, I'll be doing the income methods. If not, well, if the earnings disappoint and the stock falls down to 39 or 40, I got the 45 put strike, for example. If I think it's an overreaction, I might just wait once again until what? Until I see sort of those metrics I might want to look for. Then I might use that income method number 9 in our blueprint, readjust the position, and go forward. Which, by the way, is what I did with Fortinet close to January expiration. Because the stock, I might go to the 6-month chart for Fortinet. Here we go. There's not a lot of negative MACD going on with Fortinet, except for right now. This big drop down, but then it's come back up, and I'm perfectly fine with that. I had a bear call spread with the 70 strikes sold and the 75 against the married put, riskless spread trade income method number 6, that did exactly what I wanted it to last week. It expired worthless. I kept the premium. The whole market saw this experience. We saw that with our other examples for Dave M's question earlier. And now it's starting to move back up. Maybe starting to flatten out. I'm not worried about it. But let me go back to the 6-month chart. It was in January here, right around this time when the stock was at 58 or 59. That's when I moved my January put at the 65 strike out, I think to August. No, I think I went to January, actually. January of 2025, 70 strike put on Fortinet to continue the trade going forward because of the metrics that I saw. But during the 6-7 months I was in this trade, my apologies, folks, let me go ahead and draw that chart. That was the big drop that hit, right? Dropping down here at this time. But then when it sort of bottomed out and you sort of saw this was a good time to adjust the put down in price. Restructure the trade. What am I talking about rolling down the put? Income method number 9. It's a way of averaging down, but instead of putting more money into the stock than you would if I was just in the stock position and needed a better break even, I'm getting paid to do it. I had the put in place initially. There was a large decline, so the stock increased in price. I'm taking the profit out of that put of the married put position, restructuring the trade for a better break even to realize better profits going forward. And almost did the same thing here, but hesitated because it was such a quick drop, as you see, and then it's come right back up to near that put strike price. This wasn't so much based on MACD, but it was. When I started to see that crossover, that's when I knew I wanted to sort of stay in this position a little bit longer and maybe extend the trade for further upside. And we're seeing a little hiccup here, but that's going to happen with every stock. That's just the way the market is. Very few stocks are consistent lower left to upper right 100% of the time. Some of the examples I showed earlier, SMCI, NVIDIA, for example, AMD, they have been, but there have been strong hiccups during that time period as well. All right, and that's always something to keep in mind. So we talked about URBN, we talked about Dash, we talked about DraftKings, we talked about what we might look for. Let's go back to DKNG. I think that was a decent example to illustrate your concerns. Now I'm going to keep with the 3-month chart. Can I say, looking at this, without having the benefit of, with having the benefit of hindsight, but not having the benefit of the DeLorean to go back in time, can I say that the best times to get in this position were maybe here, when both the MACD was positive and the stock was above the SMA 20, and the MACD was negative and we were below the SMA 20. Yeah, we could say that with confidence, can't we? Here's a pretty good time to buy too, right around 35, 36 range. When what? The MACD was negative and the stock was below the SMA 20. This might not have been the best time though, because we had this decline here. But you know what I probably would have done? If I still thought the stock was bullish, that's income method number 9, to reevaluate the position and take higher profits going forward if I'm expecting and I see the change that I want. So is now a good time? Maybe not, if that's how you want to, if that's the signals you use and they've worked out well for you consistently and that's what you like to focus on, Shishir, then no, don't do it. Okay? Would I open this position tomorrow? Or on Monday, excuse me? No, I wouldn't, because Ernie's already in DraftKings, I believe, in his Fusion portfolio, and we try not to have 2 of the same positions. But I would be confident opening this position because I have the risk control in place. I might actually use a slightly deeper in the money put here. DraftKings at 41.28 showing me the 43 put with a 9% risk. I might go up to the 45 and try to get closer to a 6 or 7. Now, it'll probably be a 7.5% risk, 7% risk in that scenario. That's me personally. But I've had the confidence in that, if knowing that in the worst case scenario, I could only lose 7.5%. But knowing what I mentioned earlier, that I'm not going to hold the position all the way through. So if I decide my sentiment has changed, I now don't have the same outlook or sentiment that I had initially when I looked at this married put, I'm probably only going to close it early, and I might only take a 2.5%, 3%, maybe a 3.5% loss in that case. Nowhere near the full loss of 7.5%. Maybe it would be 4.5% if you took this 9% risk in that case. Now, all that being said, as a blueprint owner, remember, you can log on to the Radioactive Trading account as any time. You don't have to be a Fusion subscriber. You have a Radioactive Trading Blueprint Owner's account as a Blueprint owner, Shishir. Under the Blueprint pod, you have a section for Blueprint Owner-only webinars. One of the older presentations that we've did, but I do revisit this. I don't post them all the time, but I do revisit this, every 15 months, every 18 months. This one here, trust the PowerOptions stock search. What we did in this webinar is we took that default criteria that we have in PowerOptions, our preferred criteria with the preferred stock list that we use, and we ran it at January 2nd of the year and the Monday following January expiration, and tracked the positions that came up for 1 month, 3 months, 6 months, I think 9 months, and then 12 months. Just looking at the stock return itself over that period. Then what we did is we took the same exact Married Put criteria, but changed the preferred list to just S&P 500 stocks and did the same thing. NASDAQ 100 stocks did the same test. Value line, I think, portfolios that we had in there at the time did the same test. Then we did technical criteria, looking for stocks that had had a Bollinger Band breakout, had a positive MACD, recent MACD crossover, so on and so forth, and looked for bottom feeding stocks, stocks that were below their SMA 20 and SMA 50, had a near negative Bollinger Band or broken just below the Bollinger Band, bottom band, and had a negative MACD, what we call bottom feeding stocks. Total for the year, and 90% of the cycles we tested, the stocks that matched, the first 3 or 4 stocks that matched these results on the days that we searched, beat every one of those other screens, looking at S&P 5-star stocks, S&P 500, NASDAQ 100, value line list that we had at the time, bottom feeding stocks, and high technicals. So we don't change it. And as I mentioned, I go back and I do that. Now, I can take windows, okay? I can take windows, I'm sorry, let's go back. This is DoorDash again. I can take windows of just say, yeah, let's do QQQ. I could go back, I'm sorry, folks, let's go back year to date. Oh, I hate when I do that. I'm so sorry. 1 year. I am so sorry. Wow. Now, I might be able to take this time period of the NASDAQ 100 stocks and say it beat my results, or this period here and say it easily beat the defaults in that 3-month period, maybe even in this period here. But we're not talking about that. We're talking about consistently 12 months, 18 months, 36 months, 72 months. Search criteria that performs as expected to the goals of the strategy itself. That's why the default Married Put screens are there. Okay? On that note, you like to use the MACD, you know I do too, but it's mainly more for looking at evaluations for income methods. Hey, if I see a strong MACD crossover, I'm not doing income method number 1. I'm not selling a call against that particular Married Put. I might do an income method number 6 or something that leaves the upside open. But I'm not just selling a call if I think I see a strong breakout. If I'm not already in the Married Put, hey, maybe I'll get into that Married Put at that time. But if your preference, again, is to only see stocks that have a positive MACD at this time because that's what you like to enter, Shishir, change it. We use what we use because it's worked for us consistently. 97, 98% of the trades we post in that Fusion portfolio at radioactivetrading.com for Fusion subscribers. Ernie has about 6 positions open. As I mentioned, I have the 3, Fortinet, TREX, and Urban, and I'm going to open 2 or 3 more in the next month or so, probably the next 3 weeks or less. And I'll probably end up with about 6 open as well. These came directly from the search. Fortinet, TREX, URBN. Royal Caribbean, there's the DraftKings position. This is more of an adjustment he did on his initial trade rather than enter a new Married Put. But PTD, KTOS, WPM that he's been in for several years now. It's kind of like his hedge against a hedge in a sense, you can tell. Instead of being in the gold or silver ETF, he's in wheat and precious metals. It used to be silver wheat, and now it's WPM. But they all came, all of those, I can tell you right now, came directly from this search. I mentioned Pure Storage is another one I'm considering opening. That had been on my watch list. You know, I got out of AMD. I was in that up until December in that scenario. And let's see, the new positions I have, let me go into the fundamentals here. Don't really need to do this, but yeah, is Urban still in here? I believe it is. I saw it earlier today. Yep, there it is. Different strike and position that I have because the price changed. And TREX is the other one I'm in right now. I'm just using that search by symbol here, TREX. Okay. There we go. Yep, TREX is in there too. Different structure than I'm in. I have the stock at about 92.80, 93 even, and I'm holding the 95 put for a risk of about similar. I think it's about 8.8, 8.7%. We'll take a look at just a moment. Well, I can show you right here. I'm sorry. Fortinet is increased to 9.2. TREX is only a 6.4 with the 95 put when I got into the position. And URBN is a max risk of 8.5%. These two are showing, as you can tell, small profits with recent market movement, even though I've only been in Urban for 2 days. I've been in TREX for about 10 days there. So again, let's just, this is what I wanted to take a look at. TREX. Oh, I'm sorry. I got this at a really good price. 89.53 was 90. My apologies. And I have the July 95 put, a little bit shorter term for that risk of 6.4%. This opened 8 days ago on February 15th. Oh, sorry. Let's go to big charts. And there we go. On the 15th, yeah, it did have a positive MACD above the SMA 20. You know, right here was the breakout with the positive MACD. It's just would have been a worse price than when I got in. And again, on TREX, the best time to have got in is where? In this range here or right here when what? When the MACD was negative and the stock was below the SMA 20. Provided that you think it has hit a bottom, or maybe when you see the signal cross here at this level, 82, 83. You know, I got in back here. I'm sorry, at the 15th at 89.31, but that was a happy price. I was looking for it to drop below 90. That's when I got into the position. Could I have been tracking it for a few days?